whenever you want to trade futures, okay, the futures trading platform on any of the exchanges you are using, in this case I'm using Bybit to demonstrate this, always have a calculator that will help you determine what you're expecting in the market, right? So whether you're using the web version of it or you're using the mobile app, you always see the calculator at the top, okay? This is the calculator tool on the web version. So if I click on it, this pops up. Now here is where you will select the coin you are going to trade. In this case, it's selected BTC because BTC is the default coin that is here. But if you are not going to calculate for BTC, you can just click on it and select any of the coin that you want to trade, okay? Make sure you are always on the USDT perpetual if your capital is in USDT, right? Now, when you do that, you have the option to calculate for your profit and losses before you take the trade. You have the option to calculate the target price. You have the option to calculate where you will get liquidated, and then the entering price. Okay, the entering price, this is the one you can use to add, margin. Let's say you want to do dollar cost averaging, or you want to do the martingale style of trading. You can use the entering option to determine where your average price will be. All right, for the liquidation, it will tell you whether you want to long or short, where you will get liquidated. All right, and then for the target price, it gives you a target. You just put your leverage, the quantity you want to trade, and then the entry price you intend to do, the return on investment you want, and it will just give you, your target price and all of that. Then for the profit and losses option, this is the one we use most of the time. Okay, so now let's say I want to long BTC, and then I decided to use a 10x leverage. Okay, and the quantity of BTC I want to trade is, let's say 0.03 for instance. Okay, and then my entering is going to be at 26,600. All right, now where do I want to close this? Maybe I've used my risk reward ratio to determine where I want to close this. What I can now do is say I want to close this at 27,000, right? So once I do that, Bybit will automatically calculate what this will cost you, okay, with a 10x leverage. All right, now it will cost you the initial margin that it will cost. This is what it will cost you to take this trade. All right, trading this 0.03 BTC. Now the initial margin is what I want you to pay attention to. If I change the 0.03 to, let's say 0.05, you see that the margin has changed. It's changed from 79 to 133. So it means that for me to take this trade, is going to cost me, this is your margin, what is going to cost you to take that trade, right? Now, if the trade goes in your favor as you've predicted here from 26,600 to 27,000, it means that the market has moved by 1%. That 1%, because you are using 10x leverage, okay? 1.5% because you are using 10x leverage, you now times this 1.5% times 10, which is 15%. So this 15% will give you $20. All right, so it means that you are making $20 out of the $133 you have entered this trade with. All right, the same thing goes with the short. If I go to the short option, now it is an opposite. If this goes against me, let's say I entered at 26, I'm shorting at 26 and it goes to 27, it means that I am losing this same amount, okay, with this same percentage, right? With this same percentage. Now, to know how long you are going to stay in the market, you equally want to calculate where you will get liquidated. Remember, we are trading 0.05 BTC with a 10x leverage, and we enter the market at 26,600, and we intend to exit this market at 27. Now, where are we going to get liquidated? That is one thing you want to calculate to know how patient you'll be in the market. So if you come to the liquidation price option, remember we are longing, and then we are using 10x leverage. Okay, the quantity of BTC we traded was 0.05, and our entering price for long was 26,600, right? Now, if we enter this market at this with this amount of BTC, which will cost us around 133, and we stay in the market, it means that where we are going to be liquidated is when BTC goes down to $24,000. Okay, when BTC goes down to $24,000, that is when we are going to be get liquidated. Now remember, this is on the isolated mode. Okay, you can use cross, and this is calculated based on the balance on my account right now. So it will be calculating this or give you the estimate based on the balance on your account, because it doesn't give you the option to enter the amount. Now, if I use cross, it means that there is no liquidation. Okay, out of the money that I'm risking from the balance of my account, I will not be liquidated. So it means I can set my take profit or my stop loss anywhere I want, right? So it will be very rare for me to be liquidated in the market. That is what it means. But if I use the isolated option and I'm risking $100, all right, in the market, it means that or $133, just like we saw on the profit and loss option, it means that the market will need to go down to $24,000 for me to get liquidated. Okay, so if you have the hope that, oh, BTC will go to bounce in the next support level, which could be from 26, it can go to 26,000 or 25,500. It means that you still have that option or that ample time to actually stay in the market before you get liquidated. So you will now know how long you want to stay in the market, how much you are ready to risk in that trade, and all of that. All right, don't let your account get liquidated. If you get liquidated, it means you are losing that $133 at once. All right, so these are some of the things you need to actually look at before you enter a trade. And when you enter a trade, this is what you should be calculating. Okay, so first you want to go to the profit option to calculate where you will actually get your profit, what you expect to get, and all of that. Just fill in these figures. Okay, and then after that you look at the liquidation. If I do this on isolated mode, on isolated margin, where will I get liquidated? If I do this on cross margin, where will I get liquidated, and all of that? It will tell you exactly where you get liquidated, what your profit expectations are, and it will equally give you an idea of how long or how patient you should be with the market for the market to go in your favor the way you want. Okay, so that is how to use the calculation too. And then the other option that I didn't touch is the trigger price. Now let's say I want to enter a long trade and I go ahead and enter my leverage here as 10x leverage. Okay, I will equally enter the quantity of Bitcoin that I want to trade, 0.05, and then the entering price always is 26,600, right? Now the return on investment that I want to achieve, let's say I want to do 100%. Okay, so if I put 100% now, it will now calculate and tell me that the target price, which is what we are calculating here, right? The target price will be what? At 2,926, okay, USDT. Then my profit will be at this point here $13, and then the profit or losses in percentage will be 10%. Okay, will be 10%. It means that this market, for me to be able to achieve this, okay, this target price that I'm looking at, if I enter with a leverage of 10x and the quantity of BTC I want to trade is 0.05, okay, and then I enter the market at what? At 26,600. Okay, if I'm expecting to make 100%, now because I'm using 10x leverage, the 100% will now be that the market will need to move by 10%, right? So the 100% here is calculated without leverage, but with the leverage here, you will now see what is calculated here for you, all right? What is calculated here for you. Then the last option here is the entering price. Now let's say BTC is at 26,600, okay? Then I entered here at 0.05. That is what I entered, right? My average price would be at 26,600. Now, I long this market. Remember, I'm on the long tab here. Then BTC continue to go down. What I can do is to add, instead of using the option that says add margin, I want to buy more, use the buy more option. Then I click on the add, and then I go ahead and say, I now bought another one at 20. Remember, my average price there is what? 26,600. So here, when BTC gets to 26,000, for instance, I went again to open another position for 0.05 BTC. Okay, that is 0.05 BTC, right? When I enter another one, remember, my average price is no longer at 26,600. It has now calculated it, okay, to give me an average of what I'm entering here, okay? Remember, the same amount it cost me to enter 0. Here is the same amount to enter here. So my average price now has reduced to 26,300. What if I enter a double of this, which will now be 0.01, okay? 0.01, and I enter at 26,600. So my average price will now be at 26,199. Okay, my average price, this is for advanced traders. Don't go and try this so that you don't blow off your account. My average price will now be at 26,199. It means that if BTC from here now shoot up to 26,600, I'm already in profit. 26,200, I'm already in profit. 26,300, I'm already in profit. Okay, so the same thing, you can use this to calculate the average price. This is a martingale style of trading. Okay, some persons look at it as a dollar cost average. The more the market is dropping, the more you are buying. And as you are buying, it's adding up to your margin. And as it's adding up to your margin, it is bringing your entering price closer to the current market price. It means that with every little move from there, remember now, if this cost me $100, this would have cost me $200. So it means that in this trade alone, I now have what? $300 in the trade. So if the market now move by 26,500, for instance, I'm already in profit. Okay, I am already in profit. All right. So this is just how to use to, for those who have the capital. Actually, you need a lot of capital in your account to be able to use this style of trading. If I have $10,000, for instance, and the first trade I entered with $100, and the trade start going against me, I can now start doing the martingale style of trading by buying more. As the market keep dropping, I'll be buying more. Before you know it, my $100 trading capital will now be $1,000 trading capital. All right? With that $1,000 trading capital, I could end up making money in the market. This will happen when you know for sure that all indication is showing that the market will reverse back. All right? So you are looking for the possible, maybe the next support or the next resistance where the market will reverse from. So you now start applying this strategy by buying, all right? By buying and buying and buying. As the market keep going against you, you buy and buy and buy. Then with any little move in the market, when it start going in your favor, you're already in profit. You don't need to wait for the market to hit your initial target before you can make profit. But with every little move, for instance, if my entering was 26,600 and now I bought double of this position at 26,000, I now have my entry at approximately 26,200. So if this market moved to 26,300, I'm already in profit. 26,400 and I'm already in profit. If it comes back to my first entry, which is 26,600, I'm already in a lot of profit. I can close the trade or use trailing stop to follow the trade at this point. All right? You use the trailing stop to follow the trade at this point. It is as simple as that. Okay? That is what the target or the entering price here does for you. The same thing applies to the short. Okay? All of that I showed you, if you want to calculate for short, all right, you just switch to the short option. If you are doing for short, you switch to the short option and all of that, and it will give you the calculation for all of that. Okay, so make the futures trading calculator on the Bybit exchange your friend. All right, make it your friend, and it will always guide you in entering your trade and exiting your trade. All right, okay, all right. So any question as regards this?